post-Friday, what the BOJ did, tweaking yield curve control. I'm still trying to figure it out. Why is the yen at 142 and not moving towards, say, 125?
Yeah, I think it's caught a lot of people out. And I guess I'd put three reasons. We always try to justify it after the action. But I'd say three things. One is the BOJ, as you said, 1% hard target now for the 10-year. But it looks like, you talk about exchange rates, you have fixed exchange rates and managed exchange rates. This is maybe not yield curve control in the strict sense, but it's very managed now. And so the move up in 10-year yields is happening very gradually now to around 0.6. So it's a very gradual move. I think the BOJ's got still quite a lot of control with its bond operations. And then for foreign, the idea was there'd be a lot of repatriation, Japanese investors in the US and around the world. But it could be that, Japanese investors are sitting on quite big losses. They don't mark to market. Do they really want to crystallize those losses and bring their money back straight away? Or the other argument you're hearing is if interest rates nearly peaked in the US, maybe it's time just to stay in the US because long-term bond yields will start coming down over time. So there's a lot of discussion. I would say, Martin, in the medium term, the view at Nomura is this is the start of normalization. There will be more normalization. We think ultimately BOJ is going to abandon YCC in the first quarter next year, abandon negative interest rates at the short end in the second quarter next year. And of course, markets anticipate all that. So we do think in the medium term, dollar yen is going to actually go down.
Does the inflation trend, the BOJ being like all central banks, data dependent, and does the inflation expectation justify, or when is it going to warrant an exit?
So, if you look at the BOJ's own forecasts, they have inflation well above 2% for this year. Next year, they're close at 1.9, and they see upside risks. And then for 2025, which is a long way out, I think they're at 1.6%. So they could argue that they're not there yet, but it looks like they're getting pretty close. And, everything we're seeing with the research we do in terms of wage growth and inflation expectations, the pressure is building. And if you look at where a BOJ policy is, it's the only central bank, big one, with negative rates still. And inflation it has risen very sharply on some metrics, is higher than the US now. So, our view is that over time it's going to become more and more obvious that the BOJ has to move. I think from the BOJ's perspective, they've been in a deflation or very low inflation funk for so long, they don't want to get this wrong. So they'd prefer to be behind the curve.
What about the yen carry trade? Is it done, over, finished, dead?
Doesn't look like it right now, does it? Yeah, I'd say it's an open question, to be honest, right now, because it's not overly clear to me yet that the big central banks have really fully got inflation under control. There's signs that headlines inflation's come off, but you look at, for instance, Europe. Core inflation surprised on the upside yesterday. I think one thing that could happen is workers who last year really got ripped off. Real wages were very negative. They want to catch up again and recoup real purchasing power that they lost. So wages could still be quite strong and feed into services inflation.